Good night, everyone. It is Sunday, July 10th, 2016, 10:39 p.m. Eastern Standard Time. Tonight, I want to go over the EurJpy pair and pick up off of where we left off on my last video. For those of you who weren't tuned in for my last video, I actually did a breakdown of the pair, and I had anticipated that the market was going to trigger my sell stop around the 111.93 area, in which it did, and I'm currently up 70 pips on that short. Now I plan on taking this pair down further, and in this video I will explain why and how I am going to trigger this sell stop at, looks like, 110.657. So the way I'm going to do this is I'm going to demonstrate with you guys. I'm going to pull up the Fibonacci tool, go from a swing high to swing low. As you guys can see, that below the zero line, my sell stop is there. This is the entire zone. And let me add another confluence. I'm gonna add the moving average. For those of you who do not know what the moving average is, it's a very powerful indicator. A very special one that a lot of traders use is the 200 moving average, 200 simple moving average. There we go. And as long as the market is below the 200 simple moving average, you should be looking for shorts. If the market is above the 200 simple moving average, you should be looking for longs. That's part of a very popular trend following system. Now, right now we're looking for shorts because, as you can see, it's not anywhere near the 200 moving average. Another confluence that indicates that the market is in a downtrend is the fact that it's below the 61.8 Fibonacci zone. Now, only way I'm going to look for longs is above the 50% Fibonacci zone, and that is where my stop losses will be triggered. Once my stop losses are triggered, I can forget about these trades and I can look strictly towards the long side, and that's when I should cut my losses short, let my profits run. But as of right now, we're currently short. Let's stick to the short bias. Let's look at where the profit target is. Just a second. Sorry about that. Just forgot I had music in the background. So let's see where I'm going to take this. Well, let's start with the risk reward. So I'm currently risking about 220 pips for the short, and my reward is going to be about 100 pips. So I have a risk reward of about 2 to 1. I'm risking 2 times what I want for my reward. It's not the best ratio, but at the same time, if I had entered up here, I would have had a higher probability of or not a higher probability, but I would have had a higher payout. My risk reward would have actually been 1 to 1. And the fact that I'm already in the trade, it kind of does even it out. I'm just breaking it down into little segments. I actually go over how to pyramid. It's called pyramiding into your trades and pyramiding out of your trades. And I actually go over that in my Forex training course. Right now it's on a pretty low deal for $499.99. If you guys are interested, please contact me via email or WhatsApp, and I'll hook you up and put you on. Now back to the analysis. We're pretty much done. I mean, I explained the stop losses, I explained the take profits, I explained where you should look for your entry, and I explained that, you know, if the market does go against your trade, just cut your losses short, let your profits run. You guys know the rules, and you know, it can be an easy 100, 200 pips depending on where you enter your trade. And you know, if the market pulls back a little further, if you guys are, you know, an aggressive type of trader and you want to enter the market a little early, you could enter it around the 112.090 area where, you know, my sell currently is. But just be careful and, you know, have your reasons why you're entering the trade. Don't just jump in just because I'm in it. because as I said in the last video, I may be right, you may be wrong, and we may have the same exact trade setup. The main difference may be the way I entered my trade and the way I manage my money and manage my risk. If you want to learn more about risk management and money management and trade setups and how to actually leverage your money so you can walk away from the computer screen, go about your day and live your life without having to worry about the charts, you can learn more on my course. I highly recommend it to anyone that is really taking this Forex trading seriously. It's about time you guys, stop searching the internet looking for the next holy grail or the next super indicator system and actually start to learn how to read these charts naked. I can actually read the charts naked. There's a lot of industrial things that happen. I broke down this video analysis with just a moving average and a Fibonacci retracement tool, and I was able to explain to you guys exactly what I believe is going to happen. And stay tuned for the next couple of days, and I may be right, I may be wrong, but either way, it's just a confident approach at this with zero fear. If you guys would like to contact me, you guys should contact me via email at forexcapitalmanagement@gmail.com, or you guys can contact me on WhatsApp at +1-860-759-3387, and I will get back to you as soon as possible. If you guys have any comments or suggestions for another video, please just shoot me an email. I'm always open to conversate with you guys. I'm a very open person and very transparent with what I do. Thank you. You have a great day and have a safe trading.